On May 23, 2025, President Donald Trump announced a potential 25% import duty on Apple iPhones not manufactured in the US. This move could extend to all smartphones made abroad, signaling a return to aggressive trade tactics. The aim is to pressure companies like Apple to relocate manufacturing to the US, promising job resurgence. Trump directly informed Apple CEO Tim Cook that iPhones sold in the US should be made domestically. Meetings in Riyadh and the White House highlighted Trump's displeasure with Apple's plans to expand manufacturing in countries like India. Apple's current strategy involves diversifying production to countries like India and Vietnam, but not the US. Tim Cook had mentioned that most iPhones sold in the US would soon be made in India. This global approach now faces a direct challenge from the proposed tariff policy. Following Trump's announcement, Apple's shares dipped by 3%, reflecting investor concern. A 25% tariff could cost Apple up to $900 million in the current quarter. Industry experts predict increased prices for consumers, especially for upcoming models like the iPhone 17. Apple's global supply chain, built for efficiency and cost-effectiveness, faces disruption. Shifting iPhone production to the US is seen as impractical by analysts like Dan Ives, who called it a fairy tale. The cost of relocating production could triple the retail price of an iPhone to around $3,500. Steve Jobs and Tim Cook have cited a lack of skilled engineers in the US as a barrier to domestic production. Trump's tariff threats extend beyond Apple, proposing a 50% tariff on all goods from the European Union. This targets one of America's largest trading partners, with the EU sending over $600 billion in goods to the US last year. Stock markets in both the US and EU dropped, reflecting investor anxiety. The EU expressed a desire for a mutually beneficial trade deal but is prepared to retaliate if new tariffs are imposed. European leaders warn that tariffs could lead to a cycle of retaliation, harming businesses and consumers. The proposed 25% tariff on iPhones is expected to impact American consumers with higher prices. Critics argue that the tariff would hurt US consumers more than it would benefit domestic manufacturing. Apple has announced a $500 billion investment plan to expand its US facilities, including a new server production facility in Texas. Treasury Secretary Scott Bessent noted that some Apple chips are already made in the US through a partnership with TSMC. Competitors like Samsung have diversified manufacturing, relying less on China, which might position them differently under US tariff policies. Analysts are skeptical about whether Trump's rhetoric will translate into policy, suggesting it might be a negotiation tactic. Apple must navigate this volatile environment, balancing global operations with political pressures. The coming months will be critical in determining the direction of US trade policy and its impact on global economic stability.